Hi everyone, good afternoon, good morning. I quite like this one because the daily just kind of looks like it's setting up pretty nicely, especially on like some of these wider time frames. And mostly if they can negate this, so I'm not really sure if it could fully engulf back over that, but if they can invalidate this 3-bar down on this that flips on October 1st, they've got an entire month and a half to do that. So yeah, I saw that. Crypto had that reversal back down, and it did try coming back, so I had drawn this yesterday to see if it could get back in this box here, and it stalled. So I forget who was asking me about that yesterday, but ended up coming right back down. So they're just nesting a little bit in here again. I did notice, though, that MARA did not really follow when crypto was moving, but it's getting a decent move today. I do feel like today, though, individual names are moving a whole lot better than the indexes, especially the healthcare names. Healthcare names had a pretty good day. MRK's moving really nicely today. I did trade this one a little bit in the morning. I know a lot of people were trading UNH. PFE didn't really get as big of a movement as some of these other names did, but I did like, I think AMGN also had some decent moves, but I did not trade this one. Don't think their options are that liquid, to be honest. But MRK I did like a lot, and I actually really like this setup. So this is one that I really quite like for healthcare. Maybe I'll post this one actually to Twitter, because I do like this one a lot. We'll get to ES in a second here. It's not like it's moving super fast anyway, so on a monthly it's kind of flagging, but it is still stuck in an inside range, so we could definitely watch to see if it can come break out of this inside bar right here. But I was thinking, because I know this one had, pretty sure it's wicking on, yeah, okay, so like these 8-month, 9-month time frames, you see how it's kind of forming a bit of a wick? This could easily flip back up in September, depending on how much it retraces. So here's my thoughts. I was thinking if it could get back to maybe back around here, okay, like these ranges here, and form a nice little like star formation, we could maybe see like this one retrace back. And it doesn't have to be full retracements, but even if it retraced back partial of its range and set up nicely for next year or something like that. So I'm gonna watch this one because it is hitting the 4th range here soon too. Usually mid star ranges are very important, so you can shade these in a different tone if you want. That's what I'm gonna do, but that would be my goal with this one. So let's see. Let me, I didn't really look to see where these ranges had held previously, but I guess we could, just to see if there's some alignment here with where like so it looks like they held the top of this 3-bar. That's actually a good sign, because that means that they're protecting it from heading all the way back down here. Do you guys see that? This here was basically holding the top of supply, is so that it didn't come back, and you can kind of see this range right here, so it didn't come back and back test these ranges down here, kind of like what happened back in January of 2018. this range down here. So that was a really good structural hold right there. So that's probably, I really like the 11 month. Maybe we'll use the 11 month as the primary time frame. Yeah, I like the 11 month the most. But I like the structures on that are setting up on the 8 month. So I'd say support was probably right around down here. Okay, and you see in the past when it tried getting a clearance break, it stalled. What do you guys notice a little bit differently this time? So this is a, can you guys let me know if ES breaks down any lower than like 7.6? I don't really want it breaking down too much. But I did really like this setup and I wanted to show you guys. So this here, I would consider this is a breach. This is kind of like just neutralized because it's not like it failed this area here. Okay, but you can kind of see that it still was just holding the line. And then when it finally like barely breached below, that's when it cleared these ranges. Okay, so and every single time you can kind of see that it made progress. So here, when it held a little bit higher, it kind of cleared here. When it held a tiny bit higher, back in here, tested this range here, held this area here, like right in here, which allowed for it to come and kind of clear this range. So I would say that this hold right here this time around, this is giving it very good odds of breaking, in my opinion. Like this looks more of a clear trade to me. So I really like this setup. And I think you could probably keep this one on your radar. Oops. So maybe set some alerts on this. Let me set them. 80, 471, 85, 82. The monthly is nice too because you can also see how nicely it came back and cleared. Okay, let me just put this final mark right here because this is also a better way of seeing this. And the ranges, I haven't measured them yet, but they do look the same. Like from the areas when it clears it and sustains, it seems like they're about the same. So let me see here, like from here basically through here are these clearance breaks. They seem like what, 40 something points. Yeah, they are. So let's see, 40. What was that level? 8582. And what's this top range? 9219. Let me see if these match up. 9219. And it's about 41.82. That's pretty insane. That's actually very, very accurate. Look at this. Do you see that? So this range up here is close to like 134.01. That's the calculated overhead here. Is right around here. And like this could obviously be off by a few points, but that's a really interesting way of looking at this. So this is a calculated cleared range, okay? From when it actually clears. And I think the full range is probably from this area here. It's about 43.86. Probably within these areas here. So maybe if it ever were to come back and take out those highs, there'd probably be some overhead right around in here. I want to measure from where they held that mid supply so you guys can see this. Because they're working in quarter ratios, it seems like. Okay. You guys watching? I'm gonna remove everything in between. Kind of like holding this kind of mid supply here, it gives it like this range right here. This is definitely where they stalled. Close to this area here. So you could also apply those fibs on there too. These are pretty accurate. Like look at this. And this. I would use that 11-month if that just makes it a little bit easier for you guys in terms of range. That would also give you that 135 if this were to get that structure break. So you could definitely use this. Okay, ES. ES has kind of just been stuck all morning. And I'm honestly not surprised. Why am I not surprised? Why are we not surprised that ES has been stuck basically all morning? This was the template that got deleted. Why are we not surprised that ES has been stuck all morning today, you guys? Let me clean this up too. Yeah, we already basically hit our max ranges for the week, right? So what were the big areas that we've talked about that I had highlighted in the report? That's what I had quoted because that was going to probably be the most likely. 60 to 6503, 6508 to 6510 range, right? That's a huge overhead. So the market doesn't really owe us anything above that. If it did, then we would expand. We had high odds of expanding if we had closed above where yesterday? What area would we have had to close above yesterday to give us a really good odd of expanding? We closed at the minimum condition, which was 648975 to the exact penny, but what area would have given us the best odds to expand? Yeah, closer to 94, 96, ideally 97 plus. That would have given us the highest odds. Did you guys pay attention to where they opened the real-time session today? Were you guys seeing that? Like where they opened? So they did end up taking these out overnight. They did have a really good structural hold above 8.1, which is exactly what we wanted because ideally we want to avoid going back to 7.8 since they already held this in real time. Does that make sense? Like we already held these structures in real time. All that's left for this to do is now test upside. So make those higher lows around 8.1. Okay, we can mark this here. 8.1, 8.2, 8.4 upper core areas like I mentioned. Come back, try taking out 9.6. Even when they took it out the first attempt though, like this was still weak. Do you guys notice that? Like this, they stalled and then had to come back. So there was a lot of recycling of ranges last night. And then they came back again here. So like the overall breaks were generally pretty weak. I didn't mark the 0304, but these were really important spots on here too. And same kind of idea. Like there was liquidity right back in here, but there wasn't as much in this area here, and I really wanted that. They came kind of stalled 05, 06. They nested there for a bit. I think they ended up going to 65, 08, 75. And then we had this big reversal from there. And we really just had to at least try tagging that 10 spot. The 10 spot was a huge overhead. They ended up bringing it back. They were able to sustain 8.9. I don't know if you guys saw that. Do you guys see this? When they brought it back beneath 8, back here. So they took it to 8. They actually held that 66 point range. Okay, they came back, they held 90 and 8.975 I think is the exact range. I don't know if I have it marked, but it's 8.975 and that 90 spot, or 8.875. Okay, so this was a very, very good hold. So they came back, held, but then couldn't quite get back over this 6502 wall. This is where volatility came in. I feel like if they would have taken this just a bit higher, they likely wouldn't have had as much downside. Another thing too is maybe if they would have held closer to the 9.6 area, like this range in here. Does that make sense? Like, and this is the exact range that they reduced yesterday. I feel like if they would have held closer to here, they probably could have tested and taken out 08. Do you see what I'm saying? Like the better structural hold at this point in the session would have definitely been closer to this 9.7, 9.8 area. And I think that would have allowed us to potentially try testing a little bit closer, maybe not the exact 10 spot, but maybe closer to like 09. And it would have given us an odd of trying to come back and take out that range. So there was some slight reduction there from that, because that would have been the ideal area to hold at that point in time overnight. So this caused some volatility. And remember how I said we could technically afford risk back to these 70s? I put it in the report, but it's best that we avoid it. This is it. So they brought it back. And I did draw this for you guys yesterday. I think the lowest amount of risk we said we could afford. Let me see. Can you guys see my center screen? This is what I drew yesterday, because these were the calculated ranges. So these I think were the 44. I don't remember exactly all of them, but we had risk back down to 7.1 and 6.6. I was giving you guys the answers without giving you the answers, but no one was paying attention. Okay, and technically they could have taken it all the way back to 5.3, 5.5 if they wanted to, and just recycle these ranges here. So them holding around 6.6 is actually not bad. Okay, because these were the full ranges. This is the 44-point range off 65.10. Do you see this? So if we measure off where they actually held, I think that's probably 44 points, is it not? I haven't actually measured yet today. But do you see how, right? This is off the 9.7, which is where they actually opened today. That's where there's risk of 5.3. So there is that risk of that. But I think because they took it to 5.08, that it could reduce that risk a little bit. This is off the 8.875. That's 34 points down from there. Okay, so lots of confluence between 5.5, 6.66, 7.1. So these were the answers. By the way, the only person that really participated was Snack and Boys. But yeah, this was a very good answer. But now you can see that. So now if we look at the actual ranges that occurred, because I was measuring off 65, 10. So the actual ranges that occurred, which was the 65.08. Okay. Do you see where they hit? They hit just over a 44-point range. Okay. I was trying to see if maybe they tried closing above or not, but they didn't. Really good sticks here. The thing is we've been working with those increments. Remember I said earlier this week they kind of have like 45.5, 46.25. It's been like a tiny bit higher than that 44-point ratio. And sometimes it could be the offset. So it's like the range differential of what, like that 1.25 or 2.5 points, 2.75, because if they would have held closer to here, maybe, like this would have reduced risk. That's probably the 3.25. But this could also be what ends up reversing us back to what we need. Does that make sense? Like sometimes if you breach below, but then break back above, you can actually end up getting the ranges that you're looking for. So it could still end up putting these spots back in play. Off the actual real-time session open, which, did you guys see where they opened the session? I don't know if you guys were paying attention. I didn't see a single person mention it this morning, and I was kind of disappointed. 649,675 open. Okay, could that help us reduce the risk a little bit? That's where I would have preferred to have closed yesterday. This is where they're potentially holding range from us getting those bigger reversals. So like, let's say this is the range that could still be applicable for downside on session, but if they wanted to recycle this up, okay, whether it's from here or from here, that's how you could still end up getting, I don't think we'll get that today, but in general, that's how you could still end up getting those ranges. On a 34-point basis, okay, we've been also hitting close to 35, 36 points. Do you see this? So they triggered 35.25 points from today's real-time session open, but they closed above. Okay. What did they immediately do when they hit this 34-point breach? And this is important that you guys see this. What did they do as soon as they broke this 34-point breach by like 1.25? And 1.25 seems to be a very common denominator here because that's these breaching sticks. What did they do? Yeah, they swept it right back. So they still closed above. Okay. They still closed above and then took it right back. Had we opened at 9.7, 9.750, that ideal spot, like 9.675 is still good, but above 9.7 like really reduces risk. Like, do you see how this would have given you a good offset here? Like opens above like 9.7, 9.750. Okay, so they technically held that 34-point ratio, but like by a hair. So like this is still kind of at some risk if they didn't immediately negate. Did you see the price action here? That was the most constructive bull price action we had. It's because they triggered a 44-point breach off highs and a 34-point breach off open. That put us at a huge risk of going to 5553 this morning. Okay, I don't know if you guys noticed that or not, but that was a really big spot. Something else that I noticed is from like where they actually closed. And did you guys see where they closed? Remember how I said that we had very high odds of getting those 66 points off weekly open? This is insane. They literally closed exactly there, 8875. Okay. And then opened right at 8975. So like right from these ranges here, these were the 66 to 68 points. Do you see that? What do you guys notice here? Try to pay close attention. So 8975. That's 67 points. What do you guys notice? Do you see the 1 point offset? So this 1 point offset could also help us because all they had to do was close at 8875, which they did do for the session real-time close yesterday, if you guys remember. Yesterday was Thursday, right? Okay, remember session real-time close? They closed exactly 66 points right here at 359. Do you remember this? So this could help us a little bit, okay? Because we did get the closing points that we needed, the minimum, and we did technically get that 9697 open that we needed today. And they still did technically test 03, 04, 05, 06, 07, 08. We just didn't quite get that 10 spot, right? Everyone's on the same page. And that, guess what? That 10 spot, or that little extra, would give us our 88 points that we need. Do you see it? Or at least get us pretty close to it. Does that make sense? This is why they reduced the range a tiny, tiny bit, you guys. And it's not really by much, but... And 10 is not the exact spot. It could be 650975, 651025. I'm just giving you guys 10 as like a rough ballpark that I gave you guys this weekend, but that's why. What is 86.5? 86.5 is a very, 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 very important number. What is 86.5 points? What is that? That's a very important number. 85.5 and 86.5 is a super important number. What is that spot? No, from the wider ranges. What is that spot? Yeah, it's a third of 256 and it's a quarter of 346. Okay, so, and I did mention that we're working with 86 to 87-ish, 88-point intervals. And I said that, I think, last week or the week before or something like that. Like, I've been telling you guys this, but I'm pretty sure last week I did mention it. That's a big spot. Not even last week, that was literally this week. Okay, so these are really big areas. So 85, 86.5, 88-point intervals. Okay. So that's kind of where the overhead lays. There's going to be a lot of overhead around this 88, 89, 87 spot here. That was likely a range reduction stick of getting it to these spots right here. We didn't really have super high odds at 2. They were, because we don't really have too much range to work with, they might have to pin the close, right? Because can they pin the close today? Also, what is pinning the close? If they're going to pin the close, what would pinning the close mean for today? Where would they pin the close? If they're pinning the close, what would that entail? Netflix also making a bit of a comeback. These are very good spots for Netflix to pin today too. Keep Netflix on high watch next week. These are wide ranges that could give us another 36-point move from here if they clear. These are the areas I'm gonna watch super closely on this one. No, I'm not giving you guys the answers. What are pinnable areas for today's sessions? We already met max range. You don't have to get back to 6505, 6510 unless they like hammer the close or something and like ramp this up. What would the pin conditions be? Well, above zone is not bad, right? Like if they take this right back to, like, it's funny because above zone is also the 66-point break off weekly open. So like you're not wrong about this, okay? Like that could be a good pin. Is it a constructive pin though? Does that change anything? Does this change anything if they bring it right back to where they opened and closed? Not really, right? But notice that the breaks that are above 9.7 are also correlated to, remember how I said in the past that the ranges around like 3.1, 2.9, these were like the more ideal spots, like 6.4, 2.9, 3.1. These were the ideal areas that would have gotten us that 44-point break back here. They're also correlated with 9.7 price points, okay? So yeah, 9.7 area would be, because it's kind of like giving us a better closing range without actually doing it. Does that make sense? Because like back here we had 2.4, 2.2, 2.8, 2.5, 2.4. It kept repeating. We wanted the ideal ranges of 6.4, 2.9, 6.4, 3.1, 6.4, 3.3, 6.4, 3.6. Do you remember that? That's what that would do, which gives you a little bit of a better odd. What could that also entail? Also, let's say they close closer to like 9.8. 9.8 would be a really good close if they did something like this. 9.8, 9.9. Number one, that's getting out of the bear zone, right? Because bear zone is between 8.8 and 9.8. So it puts you in a neutral zone. What else could that do? What could that give you an odd of doing? Just based on this. What could that give you an odd of doing? I'm giving you the answer. Not really so much about expanding, but like something specific. It at least gives you an odd of getting to the top of the zone and maybe the channel, right? Or a higher odd of doing that. Does that make sense? Well, let's start first with the channel. It gives you a higher odd of getting some channel breaks, okay? Does that make sense? Whereas these ranges down here could keep you stuck where? Where could this keep you stuck? Where could these areas keep you stuck? They're not bad spots, but they could technically keep you stuck. Where could they keep you stuck? Where could they keep you stuck, you guys? If they did something like that. Why is that purple? Did I make it purple just so it's 50%? Whatever. Why could this keep you stuck? And this happened a bit last week till they brought it back. Why could that keep you stuck? I want to show you a recent example of this. This is a really good example of this. Where could it keep you stuck? Hurry up, guys. I have positions open too. You're not the only ones trading. Where could this keep you stuck? You guys want me to start picking names? What is this? What is this thing? No, it's not the means. This is not the means. Where is this area here? Where's the overhead? What are we battling with right now? What do you usually have to break to give you an odd of getting the next 100-point range? I don't know if you guys even know this or not. What do you normally have to break? The zone, right? So you can't enter a new zone unless you break out of this zone. We already know that this range is in alignment with 6588 and 6600, right? Where have they struggled in the past? And you can see it. It's so clear. Look. They couldn't enter the zone back here. Okay. When they finally entered, did they struggle a lot to break the top of the zone? I remember this when they kept stalling 3.5, 50. We wanted exactly 3.7 that day. I vividly remember this day. They wanted a little bit higher and they couldn't do it. And then back here, they got 4.3. This is when I wanted our 63.41, 63.30. Remember these spots here and they couldn't do it? Hence it brought it right back. Okay. And that's when, usually when this happens and you enter between two spots, that's usually when you start getting a battle between a channel and a zone. So this would be the channel area here. Okay. So like it got like maybe partial entry into a channel. And then the bottom channel, which is like right here. Do you see that? So where are they battling right now? They basically protected going back to this channel here. And you can see here, this is a really good example. If you want an example of a battle of a channel and a zone right here, this is perfect. Look at how nicely this, and I remember this day. Look at when it held the bottom of the zone to the exact penny. That was the first day it broke the top of the zone. Okay, do you see this? And then it flagged. And that was, and it followed through with price action breaking the top of the channel. This is a really good example. This is a really good example of a zone break and struggle, okay? If you ever need one. This is from beginning of July. Could this end up happening again if they do something like this? And this stalled for a duration of literally like 2 weeks. That was a 2-week stall. Okay, could they do something similar up here if they end up stalling? Until August 26th. We have multiple flip dates on the 26th. Could they do something like that if they don't end up breaking this range here and they want to kind of keep it a little bit stuck? So Pretty sure our 9-day flips on the 26th. Yeah, it does. 1, 2, 3, 4, 5. This runs till from the 13th till the 26th. They brought it here on the 12th, 13th. Could they keep it stuck here till the 26th? You can use the 9-day as an example. That was the exact same time range they had last time until they broke. It's about 9 bars, 13, 14 days. Yeah, they could, right? So what was the issue with these days here, though? You have to try finding similarities. What did they struggle with back here? What was the problem? Was it that because they took it to the top of the zone. They took it to 3.3, 3.2. That's really good price action. They closed it at 2.3. I think the calculated ranges back here, though, were closer to 3.8, 4.1, which was, I know that that's where it gets more advanced, but that would have been better than the top of the zone. I feel like when we traded this, top of the zone wasn't enough. I think we needed channel entries back here, which is probably why they stalled. But the immediate was the 256 point range. Yeah, it was. So, and then the immediate rejection back here, they took it right back to that 63.07, right? The big problem here is that they failed these core ranges and the means, right? And brought it back to the channel. That's why I was saying this week, what do we have to avoid at all costs? We cannot go back there. We cannot go back there. What do we have to avoid at all costs? Yeah, you're right, Snack, because I think that was the range from our June 23rd candle. I think that was the 256 point range from here and from our annual range of 60.41. Like this area here. Because that's our annual range. That's why I think the 5.7 and 8.8 spots right here would have been a little bit better. This was the 3.46 spot right around here. And I think when we measure the top of the ranges back in here for the July 23rd and June 23rd, it took them exactly a month basically to get 346 points in range. I think this was it. It was the top of the range. Right here, our 78 core price point. That's what it was. And it was that we wanted that 256 point break from there. Like right around here. That's what it was. And then it took them exactly a month to get 346 points in range from here to, so this was actually very cool. Yeah, it's somewhere in there, but this could easily be another similar setup like this, especially if they take this back and forth. So the importance of like getting some good structural breaks around these zone ranges is pretty important, but that could also be why they're stalling the zone here, because a zone is very important. That's what technically gives you odds of getting 66, 88, 99 point moves, right? And usually when markets are in like a very bullish, aggressive type of scenario, what's one thing that they always do? What's something that they do when they're like in a very aggressive type of break? And this happens a lot. What's something that they do? Usually when you're like in an aggressive type scenario, you snap an entire zone, right? So like they fully clear it with like the first attempt. I can't remember the last time we had that happen. I think it was back like end of 2023 maybe. I could be wrong though. So far they're kind of, the way that they're stalling right here and the ranges that they're stalling in and where they're stalling is still keeping risk of this range here and obviously that 5.551, but also still implying that they could be stalling because they might want to just pin it right back to 9.3, 9.4, 9.5, 9.6. So there's a bit of a battle here because the ranges are quite similar from where they're currently stalling and where they're sustaining. We had some odds around that 232 interval, so I'm waiting to see if they can sustain here in the next few minutes, like around the 24, 25 mark. Yeah, I don't think they can close near high of day. It's unless they really start moving in the next like 10, 15 minutes. They're struggling a lot at 8.8, 8.9. They'd have to snap those ranges basically to get that. That's not even what we're looking for though. We're not looking for that. You could get that, but we're not really looking for that. You don't have to do that. There's a difference between pinnable price points and max ranges. 65, 04, 08, 10 are max ranges. They don't necessarily have to be pinnable spots for us today. And there's a huge difference. When you start understanding that a little bit better, like with ranges, then you'll have better expectations. Because I think the issue is some people just don't have proper expectations of what to look for, and that's where they start making mistakes. So if we at least have our expectations in line, then it at least gives us a better idea of what to look for. So we're trying to avoid the channel. So avoiding 5.1, 5.3, 5.5 is obviously the best case scenario. If we could stay away from those means today, that's clearly the best case scenario. Because they could easily bearish engulf this, right? Which would come back and retest 5.3. So I'd say that staying above at least the 50% range in the next, that's why I'd prefer that they avoid. They need over 8.5 basically, and to sustain above, they need over 8.5 and to sustain above 7.5, 7.6 essentially. That's, and ideally before, this is kind of the battle, and it would take you to 9.6. That's not a coincidence that this is the 0.75 mark of that candle. This is pretty straightforward, I think. And this aligns well with today's open, which aligns well with our calculated range of 9.675, 9.725. Does that make sense? And if they could maybe hold a bit above this area here, that's better for us, because then it gives us that odd of getting these breaks back that we need to potentially enter the zone. Let's see from closing range. So you can see the risk to reward is, it should be net equal right here, basically. Does that make sense? Off this area here, this is pretty equal. But heading back down here doesn't really do anything for us. This does nothing for us. Nothing's confined in these ranges, and then we'd still have that risk of 5.3. Okay. That's probably 17 points. I would bet money that that's probably 17 points. How many points is this? This is 13 between here, but the... Oh, this is 22 points. That's really interesting, actually. So then what? That means that if they were to break, there might be odds around that 07, 08 from here. Do you see that? That makes sense that they're shy. This is what they did yesterday too. They had that 15-point range versus 17. And they were shy by like 2 points, which is probably why they're stalling right here. So that could imply maybe if they break, they could get to like okay, so the way that this is implying that if they were to break this zone area in time, and let's say they even get above 9697, there's a lot of confluence around 6500, 6501, which would make sense, I guess, if they wanted to pin the market at like an equal interval. But I feel like for that to happen, they definitely need to get above these points here fairly soon. Like one end has to basically break and sustain. I had some odds around this point in the day, but so far it's, unless they start giving us some better sticks. I would say if they can get into the zone before 3, then odds are pretty favorable that they would probably try sustaining this range down here around that 6-1. That's actually pretty funny though that 6-1 was a very calculated spot for us, right? Remember that? I have it on this template. And they actually ended up holding that today, so kind of like a repeated range from the past. All right, what do you guys think? How many here think that they're gonna clear and break? Clear 60, not even 8-8, but 65-8-6, let's say, or 64-8-6 by 2:32, 2:38 p.m. That was the earliest that I had, and that would give us better odds of getting into the zone before 3. Otherwise, we're gonna still be at risk of that back and forth. But to do that, they definitely need some they need some good sticks, okay? You know what? The September 19th 85 calls on MRK are actually getting some volume, because that one's usually not too liquid of a name. Even the 90s picked up a little bit. All right, let's see here. Let's set some alerts maybe on ES. So this kind of stick is basically exactly what they did back here. You see when like they just brought it back down like that? They're gonna, basically it's to prevent it from having broke. There was some odds at 204. They weren't very high. So the 203 could have brought it to 8889 as early as back here. It seems like there's a lot of odds around like 86 though. 86, 87. So we'll see. What time is it? 2:30? I marked 2:30, but the odds were closer to 3-2, 3-3, at least for this retest. What do you guys think is going to be max range for the session this afternoon? The thing is did we have super high odds for the 14th and 15th? You guys? Did we have really, really high odds for these 2 days here? In terms of, no, we didn't. So, and the range on these is, it makes sense because like we didn't really have like the highest odds, right? We just had a lot of pressure for the 12th and 13th. Those were the days that really would set the tone. And I think the 13th stalling, 6503.10, like is kind of what set the tone for this as limiting range to that being the max range. Does that make sense? Because I feel like if they had done that on the 13th, then we would have had really good odds of getting that continuation throughout the week and those extended breaks. But do we want the fourth bar today to close red? Okay, so from a very base approach, so 1, 2, 3, 4. This is the fourth bar here. 1, 2, 3, 4. This is a day that usually can exhaust or expand. They tried exhausting. If we want 7 bar continuation, 1, 2, 3, 4, 5, 6, 7, it would probably be preferred that they close this green, even if it's just slightly green. MRK getting that nice break here. Oh wow, that's actually directly to that spot. I don't know if anyone took any calls on this, but this one, they did get volume for September 19th. It's just a very nice setup because I do think that this one could easily get back to that 92 retest. Especially if they close around here. I'm not sure if you could also trade, I guess, dailies, but might be a little bit harder with those. I'm not really sure how liquid they are is the thing. There's probably some spreads on those though. Yeah, UNH has been pretty insane. I saw someone tweet yesterday that they're going to block that word out. From... Okay, 232 so far, stalling around 8.3. So let's see, this was the window that I figured they could try coming back and getting these retest here. My back is itchy. Do you guys have a fun week though? I had a lot of fun this week. We hit 6,500. A lot of people thought that the market was going to tank this week, so I mean, I still feel like we had a really good week. Even if we didn't get the expansion scenarios today, that's fine. It's crazy that they actually held 6-1, because that is still a big spot for us. What do you guys think? This looks so far like it's stalling. I have so much stuff that I have to do this weekend. Let's maybe look at some of the frames associated with low of day. This is, oh, this is 32. I didn't even realize that. That's stuck till 3. Okay, so this is 1, 2, 3, 4, 5. This could be a reason why they stay stuck, because we did have odds right here, but they could easily keep this stuck till 3, unfortunately. There's some extensions through like 254. These are all the way through 328. Hopefully it's not like them leaving it stuck till end of day. 328, 332. That seems to be the case, I think. Which, I mean, is not the end of the world, but a lot of these could just stay stuck. These are nice, though, because these are retracing. So as long as and those don't flip till after the close, which means they could still retrace up until after the close. After the close is where volatility could start hitting, but that obviously puts us at risk for after the close, so they are definitely reducing range here. The next odds were pretty late, which is why I would have preferred that they at least try getting over 8.5, 8.6 during this period, because if they keep this stuck beneath 8.5, 8.6, that's still going to keep us at risk for that downside. Yeah, that was the next window, is between here. But then that gives us a lot of reductions basically on overall range for the session, unless they're just trying to, you know, like yesterday, how they basically limited things till end of day, like I said. And that had a very high odd that they would do that. That was definitely the case. That happened the day before too. I think it was, wasn't it the day before that we were durational till the end of day and we only had odds last 10 minutes? Today's not exactly like that. I wouldn't say it's exactly like this when they kept it stuck in these ranges here. Like Wednesday had mostly odds last 10 minutes of the day, so it made sense, but, and that's when they had stalled 9.6. Today's odds are not exactly like that, but it's also Friday and it's the weekly close, so that could also be another reason why they just want to wait till end of session to pin the close or something. Does that make sense? They are basically stalling a 24-point ratio. These are the worst ratios to trade within, but they did break 22 points, which is good. That's the 8.3 stall. So them stalling 8.3 at 232 still means that they met a 22-point range. So it's still not bad. See if they can try holding 17 points now during this interval. And I think 33 points from here, 34 points, takes us right back to 9.550, 9.4 area. Do you see that? This range in here, 9.675. So we do have fairly decent odds to get back to OR. Okay? But any odds of getting above 64, 94, 96, 97 so far right now is pretty decreased, because this would have been the best point in time to get back over 8.6, 8.8. Like, I'd say if they would have done it around 204, those odds were pretty high. So those will be my conditions this afternoon, is see if they can try to get back in this range here, ideally before 3. Because if they don't do this before 3, we're going to get stuck until likely 321, 328, 330. And that could really start to limit some of the range that we have if they kept it stuck until here. Mark 3. I didn't actually see what you guys voted for. Oh, you guys voted no? Okay, that's good. Didn't really seem that likely. It's my channel's birthday on YouTube. I didn't know that. Today's the 15th, right? I don't know why my YouTube always like resets the title. It's so weird. Why does it do that? Today's the 15th, right? Okay, sorry, I have that open on both sides. I just wanted to see this. I don't know why my... Let me mute this. YouTube always... Was that helpful? Definitely need way more viewers though on YouTube to get that. YouTube's a little bit harder. I feel like, I don't know why, but Twitter you get way... yeah, I didn't update this one. You get way more viewers on Twitter. Like, I used to hit, like, average 300, 400 viewers on there. Sometimes I'd hit even, like, 800, 1,000 if I used to do spaces. Like, I don't know why on here it's a lot less. But maybe because the audience on there is, like, mostly gauged towards finance. So let's see, Friday, OPEX day. Okay. There we go. I just hate Twitter ever since Elon Musk bought it. He just ruined that platform. He like absolutely destroyed Twitter. It used to be so much better. He just ruined everything on there. Which is such a shame. Especially for like long-time users that built their platforms on there. But I mean, I guess you can stream on there too, which I did do once or twice. I might have to link it to Twitter then too. I'll do that this weekend. I'll link it to Twitter. Can you guys make sure can you guys sub on YouTube too? They are so annoying. They're so annoying. And even like the verified thing is so stupid. Like that should just be for verified accounts. Like everyone being verified, what a money catch. But it like is better to be verified because then it avoids the bots. You know what I mean? Because then I could just set my comments to like verified people only. Because it's reducing engagement, right? Because no one's really engaging, and also the engagement kind of just like got all whack. I used to get way more engagement before that was bought out by him. Like if I look back at my tweets from like 2019, 18, 17, 21, 22, I swear I used to get like 300 likes, 400 likes, like at least like 50. I feel like my engagement on there is so bad now over the last year and a bit. I mean, to be fair, I didn't really post as much, but the bots made it so much worse. Like it's so bad with those bots. Thank you. Okay, let's see if they can get any sort of range breaks here in the next few minutes. Like most of these odds are looking fairly late. This still keeps us at risk, unfortunately, of the back test, which I do want to avoid because if we can stay in the zone, that's going to be best case scenario for us. I still think our odds are pretty decent that they can get it back into the zone because, I mean, they did take us to our ranges overnight and they did open us and close us at our 8-8, 8-9, 9-4, 9-6 spots, right? Like, I feel like they wouldn't have done that if they weren't planning on taking us back there, but... Also, our ranges this week were insanely accurate. Like, super, super accurate for both upside support, downside. So for highs, lows, open, close, we hit every single side in terms of these highs, the open, close, the lows. The fact that they didn't take it back to that channel too was also insane. I just think that these core areas right now, unfortunately, don't really do anything for us. Like, usually core ranges do, but right now this isn't really going to do anything for us. Kind of like last week. I don't know if you guys remember when I said last week, if they would have kept us here, it doesn't really do anything for us. Like, in the past, it might have, but we need to get some structure breaks, and thank God on the Friday they did. They brought it back to the zone, right? So it's kind of the same idea. Same thing here, like them taking it back here, the bottom of the zone and holding it. This was a perfect example, by the way, on August 11th of being stuck in the zone back and forth. So, and that was the exhaustion stick. So that's kind of interesting because today is like the opposite where it's struggling to get into the zone, which can put that back in play if they don't end up retracing here in time. All right, how many think that they'll clear here by 3? This was the next window here, so clear before 3 p.m. It is OPEX today too, and price tends to move a bit slower. How many here think that they'll move this ahead of 3? Oh, they did trigger that. Not much volume though. What do you guys think? Closing the week. No, those seem pretty likely. At least they're holding the 7-6 mark, but 7-4 is where it starts to get very tough, I think, right? We said 7-4, 7-5 area, because that's, I had initially said 7-4, but I think 7-4, 7-5 is that 50% range, if I'm not mistaken. So they're just above 7-4, 7-5, just beneath 8-5 by like 2 points on each end. So structure definitely has, if they start breaking down 7-4, then that's going to increase the odds of back testing this downside here. That would completely ruin odds of getting a zone close today, I would say. So it is pretty important that they at least try holding this range right here to avoid getting the full breakdown back down here, because this will put 5-3 in play. And you can see the slight reductions here. The thing is the odds were closer to 254 and 3, so them dropping it right now, technically, is that better or worse if they're doing this around 246, 7, 8? Better, because then it still saves time to retract back up. So, but still implies that they might, because if they could do something like this. That's only if I would say that they avoid a downside stick at 5-2, 5-3, right? So the closer it is to 254, you definitely want it to at least start retracting a little bit, okay? But as early as 4.6, 4.7, 4.8, that's still fine. So 250, 251. Do you want this beneath or above 7.8, 7.9, you think? Especially if 7.6, 7.4 can trigger mass volatility. We're trying to hold above this box range right here. What do you guys think? That you'd want exactly this, right? So that you can have some odds of maybe retesting here and maybe some odds of getting the structure break right there. So we'll see. Otherwise, this is going to keep us stuck again till literally 330, 336 in a 6-point range, which is really annoying to trade, I know, but hopefully the stream's at least helping you maybe reduce the risk of like over trading. Is this really a session you'd want to over trade in these ranges here? No, and these days never really had high odds anyway. Like I held overnight for, what day was it that I held overnight? The 13th, but that just made sense because like heading it, because I held overnight on the 12th because we had good odds that day, so I could cover the open, right? Then we had that big short, but like, and then the retracement back up. But we had odds on the 13th for volatility, range, so we don't really have super high odds today. Today is what? What kind of session is today? And so far, I still think it's that because they haven't given this up and they're still sustaining here. The only thing they haven't done is retract up here. What kind of session is this today? And it's almost always the case on a Friday. Just kind of depends unless we have like mass flip dates. Okay, so this is looking a little bit more constructive. Yeah, this is a pinnable session. I do want to see if they can get back over 8.3. 8.3 is 50% of the range. And we had odds for that at 232, which they did test that. I don't have it marked, but 8.3 was 50% from, I think, yesterday's session or something. I don't remember which one was which. And I think that was also 22 points in range. Yeah, it is. This area here. Off lows. Okay. So if they can break that, could give us some decent odds here. So far stalling a bit. This was the window that we had. Did I put up a poll for 254 and 3? I don't remember if I did or didn't. I think I did, and you guys said no, so. Okay. So clearing doesn't necessarily mean they have to enter the zone. I just think they'd have to break this 8.550 wall, and probably closer to like 8.6, 8.7 seem like the spot. I think that they could test 8.5 during this period here. 8.6. Like, I'd be surprised if they didn't at least make some progression here. Because usually sessions like this, it's like you slightly progress, like slightly higher highs, slightly higher lows. Does that make sense? But I still think that they'll save the zone ranges for like close to end of day, like the last half hour, 15 minutes. That makes sense if they want to pin this area here, in my opinion. So, but we'll see if they can at least give us some reasonable sticks. So far 5-4 kind of stalling. You can see this period here, they reduced the range. This period here, this was the earliest period between here and 204. Same thing, they reduce the range. So boring. RUN hasn't stopped though. This is a fun one to trade today. It even broke annual ranges too, which is insane. Do you guys see this? Like, look, that's a full annual break. That's pretty wild on this one. And now they're getting like kind of like almost a full, I don't know if you can see that, but do you see this? If that thing breaks 15, 16, whatever that spot is, that could get a pretty massive move because that would fully negate. This is like a cleared move off open too. That would fully negate. I would set some alerts on that on a 14.95 15 break because that's a huge spot on this. Tell Bernie's group that. Let me actually listen in. Anyone trade that one? Let me see their options. Oh yeah, their $15 calls have
block at 80. Some stopped at 190 on up. Up. Some of you must have been on it. Yes, somebody had to be on that. It was moving for a bit.
$15 calls also had crazy volume.
Pony, new highs on Pony. Run, 1487 on Run. Still moving higher. Bosch Health announces increase in its shareholding by chairperson of the board and board changes. Paulson Capital will be joining the board. So let's see, is that correct? So Paulson bought the shares from Icon and his affiliates. The company is not party to any agreement or arrangement with Paulson or the affiliates of Icon Group in connection. 19% of the company outstanding. Paulson believes there is significant value in Bosch Health and confident the company's efforts to maximize shareholder value. Excited about the underlying business prospects. Its subsidiary, Bosch & Lomb Corp.
That's exactly to that 7.5 spot that I was talking about too. 6.5 points in range. That could have given us a zone entry here. Do you see this? So volatility starting to increase, which is what we would expect during this period here. Maybe they can try to negate some of this risk in the next like 2 minutes. Otherwise, that's going to put that retest at risk like we talked about. That was this area here. Okay. You see it? I already talked about this, but this is... So maybe sometimes they do hit both sides before getting a break. So sometimes they have to trigger 7.4, 7.5 before they can get a break of 8.5 and so on. Does that make sense? Like sometimes you do have to hit both sides to get the range breaks that you need, but the retracement's just as important. Like I would say that they have to hold here and try retracting back and get some progressive sticks as soon as 3 o'clock flip. So whoever said sometimes a delay, that would make sense based on them breaking down ahead of 3. Does that make sense? because it's like they already increased the risk here by taking it to that 7475. So in order to decrease the risk, sometimes you need like immediate follow through. Otherwise you'll get the big back test of this range down here, and that's what would completely take out structure. And they're kind of keeping this stuck like right in between. This is 3, right? The 32nd interval of 3 o'clock. So we can definitely watch 301, 302, just to see if they try to defend this a little bit. That 7475 is a pretty big spot to lose this afternoon, because that's going to put us back at risk of retesting lows. Three o'clock getting a structural breakdown here of 7.5. 01 is going to be important in terms of sustainment and negation, or if it takes out this range. Let me just set an alert so that we have it. So again, delayed. This definitely seems like an end of day type of move, unfortunately. Or they could just keep us stuck in the 70s, which doesn't really do anything for us. That would just apply pressure for Sunday to gap open. Which is the case sometimes when we don't get like ideal pin areas, is they reset conditions on the Sunday. So let's see if this can hold here, if it takes out that range. They're trying to save it a little bit. There is a little bit more volume too at this time of day. I don't know if you guys noticed. Like a little bit more liquidity at this point in comparison to back here. What would be the best case scenario right here, especially off these price points? What do you guys think? What would be the best case scenario here? For them to do what? Also, I'm not trading this afternoon. This didn't really seem like we'd get good odds. You could have taken a long, like, down off, like, 6.6, 6.1 for the retest here, but I knew that based on our odds today that they could just keep this stuck. At least maybe till end of day, and even then it might not be worth the full trade. What would be the best case scenario here this afternoon, you guys? Especially off these ranges here. What do you guys think? 64, 74, 75 broken here, and beneath 7.4. This is where risk really increases, especially because they did not sustain and retrace or negate by 3 or even ahead of 3. That's where volatility tends to increase. And the follow through, like 301, 302, was very crucial, because that could have given some odds of this holding, but you could tell even by 01, 02 not really retracing any range above 78, 79 that they could take this right back down. Where do they take that down to though? 7, 1. There isn't too much confluence in this area here. Like between beneath 7.4. So really just would have to try getting like an immediate negation or something, because then it's still going to keep that risk in play. The only thing I could think of them doing if they want to avoid 5.3 is maybe they take it back, but then they actually hold the 33, 34 point ranges this time. And make like a slightly higher low. Like that's the only thing I could think of. Or like from highs, like hold above this ratio here, which would mean holding closer to like 6.2, 6.5. Okay, now there's better volume coming in here. This is probably where it'll take out this 7-1 spot this time. They have their dividend day September 15th, so I mean this one could also still be, their earnings were not bad. This one could also be a pre-divvy run-up on this one. A nice little short setup this afternoon after this thing stalled at 3. So two things could happen here. Like I said, they could maybe try holding between 6.2, 6.4 if they want to try sustaining like a higher low. Like between this area here. Because this would be like the 34 and 44 point ranges. But I would say that that would heavily reduce our odds of getting into the zone today if they took it all the way back down here. If they sustain, like, I don't know, this isn't really a huge area of confluence. If they sustain, like, beneath 7.4, okay, but, like, above 6.5, 6.6, I would say this would just make the price action extremely choppy this afternoon and probably give us odds of staying stuck in the 70s. Does that make sense? Because then it's like they would limit both sides. Oh, thank you so much for that. And that would be the case if they left range open on both ends of the trade. We already know that the range open on downside is closer to like this 5.1, 5.2 area here. That's the open range on downside. This is what was required to hold right here. Okay, this would be the range left on upside. Does this make sense? This right here. I know it's kind of hard to see what this in between doesn't really do anything for us. Okay. These ranges here and these ranges here don't really do anything for us. And they're keeping this basically stuck in between. We gain nothing and we don't lose anything from this area here. Like the core areas, 6.6. Lower core areas, 7.1, 7.4, 7.3. Beneath here is where this would get extremely tricky. So what do you think the best case scenario would be here for them to do? This area isn't necessarily bad, but it is not great. And then this is the area that let me delete this actually, hold on. I know it's messy with all the lines on here, but it's because these are areas with like heavy confluence. This should be close to like the 9.5, 9.6 range. Okay, I think this is a little bit more accurate. What do you guys think? So this is basically what we're working with right now. Beneath 7.4, but above, let's say 6866, like above these lines here, okay, because this is where risk gets a little bit higher. Kind of like here. Basically these ranges here is where you're kind of playing with fire. Okay. Yeah, that's the goal, but we can't do that if we lose these ranges here, right? So what do you guys think would have to be required here? I would say probably by like I don't know, maybe the midpoint, like 314, 15, maybe max 320, 21. What do you guys think? Let me just delete all of these lines in here so it's easier for you guys to see. What do you guys think would have to be the case? Especially if we already know that these are the big areas of confluence. Let me delete the zones here too. Okay, let's delete all these flips that we had. I think these are the midpoints. These have to be the midpoints. Some people are just better visual learners. Okay, what do you guys think? If they end up taking down this area here, okay, this is where there's a lot of risk. This would have been a more calculated hold of like the 34 point ranges. If they keep this in between, which it seems like that's what they want to do. In between would mean above here, but beneath here. Does that make sense? Does this make sense to you guys? This is above here. Okay. But beneath here. It usually is going to be around 5.5 to 6 points. Basically half a zone. Okay. Like this. Do you see this? What do they have to do during this increment here? Especially before, I would say 328, 330. What do they have to do? And this is pretty straightforward, I think, and I'm giving you guys the answer right in front of you, but let's see if you guys can figure this out. What would they have to do? These are like the micro ranges in between. And this is to avoid them not only going back to 6.6, 6.4, but to even keep an odd in play of getting 8.8, 8.9, 91, 92, 93, whatever the case is. What do you guys think? Nope. Well, yeah, but like, where? Let me just reset the chart so I don't lose everything here. Kind of like the same range that they gave when they failed to go up, they broke down. Yeah, probably close to like 8.1, 8.2, 8.3, like that. I think like 8.1 is probably a decent spot. Basically, you want to try breaking that same range above the area that we wanted to sustain. So like close to here, 8.80, 8.1. Do you see what I'm saying? Here. I feel like it's still beneath 8.3 and beneath 8.5, but it kind of keeps us sideways. Does that make sense? It's not really a great spot, but it's not terrible either. Well, I mean, it doesn't really matter. They technically have till 328, 330, but that would just give better odds of actually getting a full structure break. Like, you see how, I don't know how to explain this. Like, sometimes verbiage is hard. You see how they got, like, the structure break beneath here? Okay, beneath this area here. If they break as early as, like, to 8-1, 8-2 during this period here, it could give a multi-structure break. That's where they take out 8-3, 8-5, 8-6, and one break. Does that make sense? You get, like, a full structure break like this. And then you could get to, let's say, 8-9, 90. It's the same, it would be the same thing. It's like a sharp reversal, sharp retracement, okay? And this sometimes is the case when they know that they're playing with both sides of the trade. So, but the way that you'd have odds of that is if they start getting some better structural breaks, like to 8-1, 8-2, like where it's just beneath, okay, but just above like the area of confluence. So like, and then that's usually how you get like multi-structure breaks, kind of like what they did back here. Because that's what this was. This was a multi-structure break. They broke, do you see what I'm saying? They broke multiple structures right here in a single stick. Okay? So you would have odds of that same sort of thing happening on the inverse if they retract some of this range ahead of time. Usually what that looks like would be something like, maybe like this, like where they get partial range, and then you get the bigger range break, like this or something. But I would say that that's only the case if they can clear soon, which doesn't really look like it. And considering this is a pinnable session, I feel like they're still going to keep this delayed till after this period here. What would be the condition too, actually, right now for this, you think? Did you guys notice anything? Yeah, that doesn't have a high odd of happening though, based on how they're trading during this period. Like, look at the 18 stick. I think a condition would be that they'd have to stay within this range here. So this would be, let me set this to 5 minutes. I'll get you guys to vote on that. I'm gonna quickly grab some water and I'll be right back. We'll see if they can get this back at least over this mark here during this period in time. It seems like they're trying to save this for end of day. Honestly, I really don't want them to close this in the 70s because that doesn't really do anything for us. Unless they give us like a gap or something on. But if they close this in the 70s, guys, that's implying that they could keep this sideways for 9 days. FYI. So getting in the zone and closing in the zone is going to be our best bet for next week, okay? Let me just mute this real quick and I'll be right back. Oh, I need your guys' help. I don't really like that dress that I got. I don't know what to wear tomorrow. I feel like I gained weight this month from sitting so much because we had so much rain for like the majority of July, and I mostly just stayed home. Like, I feel like I gained back like 5-6 pounds or something. Oh, is that done? It's not 3:28 yet, right? Let's try to get back to my desk before 3:28, 3:30. Can you guys hear me? Okay, let's see. So they've tried sustaining this range here, but they definitely need back over the 7.8, 7.9, 8.1 area to prevent this from staying extremely pinnable into the close. So we'll see. We need some sort of range and volatility here, especially. So we had some odds after the bell, unfortunately. Like a lot of these were after the close, but I already knew that they'd probably keep this stuck if they didn't break between 204, especially between 235 and just before 3. And if they trigger down beneath 7.4, 7.5, and 7.6, because this basically is the stick range that we needed to essentially get back above and break this area here, like over 8.3. Which is unfortunate because that's a lot of reduction that they gave, especially ahead of 3 o'clock. So Netflix, I want to see if they can pin these exact ranges here into the close. So a lot of names are just stuck at pinnable spots, to be honest. Where's Apple? Apple, I'm pretty sure the pinnable ranges are in here too. Oh, it did. Oh, Apple did tag 234. Hey, who took Apple for the week? I didn't realize it hit that target. Apple hit the 234 target point, you guys, on Apple. I did mention that earlier this week, heading to 234, 235. You just had to buy some time on that. It looked like it stalled that wall. Oh, they did hit 235 yesterday. How come I didn't notice this? So do you see how basically everything hit its max range for the week? Netflix, crypto, Apple, Google, everything's like basically just stalling at their max ranges for the weekly session. Before OPEX. I can quickly go over it, but you can also rewatch the stream because it's recorded. It's basically just an annual range break and essentially held mid-supply here. So it's avoiding from heading back down here, which could help give odds of retracing back here. Like this range here. It's basically a cleared trade, is what I would say. in the past they couldn't quite sustain this area here. But they'd have to, at the least, come back to this range in here and try taking that out. So if we can get some better structural closing points on that. They also have their dividend date, September 15th, so it could be a nice ramp up into, like, this is just a better structural hold here than it was back here. And it's also exact metrics of the clearance break and its previous range is exactly where they stalled here at 134. And they were taking September 19th, I think I said. Every swing trade this week, though, hit. Netflix, I mentioned last week, and then Monday. This one could be a really good break to that 1244.47 spot. Apple to that 235 range. Especially when it broke this area here. This was a nice clear trade off that 205 to 212. Next interval on Apple is 243, 244. Yeah, still stuck in this box range here around that 6474, 775 spot. Which, like I said, this doesn't really do anything for us. These areas here do literally nothing for us. They're just annual ranges though, right? So if, let's say if they did. Not that they're bad spots to pin, it's just that we don't really progress pinning here. That could imply those odds for those inside ranges for the next period of like 8 to 9 days. How many still think that they'll give us an odd of pinning back over 8-8 into the close? They're basically leaving this like right in between both sides, which is kind of annoying, but so like off of this range here, this is basically kind of like being stuck in between a 12-point ratio. And this is probably linked to 9-7. Yeah, it is. And this probably linked to 5-1, 5-2. Well, this would actually give odds of the channel. That would not be good. What's the micro movements? Like 6 points? Which is why you need back over that 7-9. Honestly, they could. I feel like maybe if they get back over 7-9, 8-1 by 350, like that's not that far off, but they're cutting it pretty close by staying stuck in the 70s. Because this would still give us a close over 6-8, which is core. 6-4, 6-8, that's still the previous all-time high. Does that make sense? Especially if we measure off that 7, let's measure off the 7.5. That would still close us above 6.8. Okay. This would give us an odd of like 8.1. This would give us an odd of, this is actually a probability too. If they pin us just below, this would be like just beneath the zone, but just above core. So that would be like above 8.5, but beneath 8.7, 8.8. This could also be a probability, which could give us odds for like a Sunday gap to 8.9, 9.6, 9.7. Does that make sense? If they do something like this, that would be setting us up to see if they'll gap open the Sunday session. And then if they do something like this, is where it would be them basically taking it back to the previous. Which it's not bad, it just doesn't really do anything for us. This can put us at some risk because you're basically playing with fire back at that previous stall of 6.850. Does that make sense? So those are the odds this afternoon, and then anything obviously beneath. Here is where risk would come in, and that makes total sense too, because that's beneath the 34 and 44 point ranges. So is this, that's pretty close. Maybe it's like 6.5 points then. Which makes sense because that's the 13-point ratios. This area here. That would be just beneath A8. That makes sense. I feel like that's... Does this help you guys understand this a little bit better? That's like a tiny, tiny odd of like a zone entry. It's not really high though. Because it's a zone entry, but it's still beneath 6.48875 and 6.48899. Does that make sense? So even though it's a stall right at the zone, it's still beneath the areas that we need. And this would be like a slight break above that 9.4, but still beneath 9.6, 9.7. Does that make sense, guys? This is the easiest way I can try to explain this. I think these are the odds that they're setting up right now. And I feel like this area has the most confluence, but I could be wrong. We'll have to see what they do. What time is it? So which box do you think they'd have to be out of by 350? Let's just watch it like this into the close. I feel like this will make it easier for you guys. Which box do you guys think they'll have to be out of by 350? So only really, I think the most two probable scenarios is they keep it stuck in this range here, or they try breaking and getting the slightly lower pins, which would be still beneath 64.88, and 64.8875, 64.90 is the 66 to 68 point range from weekly open. That would be the best area at this point, which would basically take it right back to weekly OR ranges and right back to yesterday's open or close and today's open for the session. The most ideal scenario is obviously pinning around 9496, but they would have to have really aggressive price action and sweep this yellow box here for that to happen. Remember how I was saying they'd have to basically take out 7-4, 7-8, 8-1, 8-3, 8-5 in like single sticks? I feel like they'd have to do that before 350 to even give us an odd of getting the 90s. Does that make sense? So those are, I think this has the most odds still, but we'll see. Another thing they could do is maybe just slightly above here if they were to get some good sticks, around 9-1, 9-2, which is above 8-8, 8-9, but beneath 9-4, 9-5, 9-6. And that seems to be a bit of a common trend today too, is taking it like just beneath, just above. So let's do a poll. Which box you guys think? Box pin. Let's make this easier. Green, blue, yellow, orange, red. Let's get some votes on that, guys. I put it to 5 minutes. Let's get more votes going, guys. Tie between green, blue, yellow. That makes sense because those are probably the most probable areas. Hopefully they at least pin above 7-4, 7-5 because that's that 50% odd. So at least it still keeps an odd of getting the upside retracement to 8-8 and 9-6 for Monday or Sunday session. Not many people voting red or orange. Orange would be the worst area to pin because it just keeps us at a high risk. I voted blue just for transparency, but I would think that they have to definitely clear the yellow box by 350 for that to be the case. Does this help you guys understand this a little bit better? Like this should... pretty straightforward, and I think this is 34 points in range, 33 points in range. That's perfect. Okay, we're just breaking it up into 5 parts. So instead of it being like the zone range, it's kind of like the intervals that we're working with. So because the zone would be potentially getting up to here. All right, let's see. Oh, tied 8-8-8 between green, blue, yellow. Still last 15. So what do you guys notice here that they're doing? Last 15 minutes. This is very important. Pay very close attention. What are they doing here? The last 15 minutes. Pay really close attention. What are they doing here, guys? The last 15 minutes. Yeah, they're barely moving, but they are still doing something. No. This is how I know you guys don't really... Remember what I said? Even on slow days, try to look at it differently. Don't look at it as like chop or them barely doing anything, okay? They're still trying to hold the line at 74, 75 here, okay? That's very important. They're trying to clear this orange box zone. This is also 50% of the range. Okay? Which is going to keep some odds in play of trying to get this structure break above 8-1, 8-3, so on and so forth. But they definitely need to start clearing 7-6 and sustain 7-4, 7-5, 7-4-50. I'd say you probably want to break over 7-8, 7-7 area, like maybe like this range in here by the 348, 49 mark, like ahead of 350, because you want some odds for 350 to try taking out those structure breaks that I was telling Dunks about, like where you could try getting multi-structure breaks. I don't think that they're going to do that though, based on how they're stalling here. But I feel like they could at least try testing 8-1 if they can clear. Okay, so blue and yellow are tied. I do feel like those are the most probable. I didn't really think that green had super high odds based on the reduction they gave us right here. Like, I feel like unless 350 or 55 gives us like a big clearance stick, really. I voted blue, so we're tied in between here. No one voted for orange, which is interesting because that would be the worst spot to pin, and I would bet if they don't clear this in time, then they probably would pin it there. Red, I don't see us pinning at lows, so hopefully they don't do that. So far 348 stalling a bit here is 7-6, 7-7. Kind of see the stalls. See if 4-9 can get some better structure breaks. So this would basically be like the reset the last 15 minutes off 7-4. Okay, like maybe at least back to here, which is at 8-1. We need some strength though. I would say at least back to 7-8, 7-9 for this to even get any sort of movement here. You have to also see which spots are, like, these are 17-point ranges here. These areas here from, like, prior days lows. This is 22 points here. Do you see what I'm saying? So there's definitely some confluence in these areas here. It's not the most ideal, but that's partially why they could keep it there. And it kind of leaves that 17-point upside on the opposite end. And does that make sense? So that's partially why these areas could be pinnable, like around here, 70, 75. So far I could tell with that stall here at 7-7, 7-8 that they weren't going to get that structure break at 50. That's why I was saying I'm surprised no one voted orange, because technically if they don't clear this range here by then, this would be a pretty likely spot. This is also the 17 to 22 point ranges from yesterday and the prior day's lows, is this area here. If they decide they're keeping it in between. Whereas if they would have cleared 7-8, 7-9 here, then I would think that 350 could have had some odds of getting that 8-1 break. So let's see, off like 7-8, 7-9. Yeah, and they would have maybe even had odds of testing 8-4. Do you see that? If they broke 7-8, 7-9, you could have retested this 8-5. Well, it's moving right back to its pinnable spots into the close. Nice. I was looking to see if this one would pin at 1242, 1244, 1246 area, like this range in here. That one looks like it's likely going to do that. I feel like ES will pin the area that no one voted for. Watch that be the case. No one voted for this orange box range, which is the worst spot to pin, but probably what market makers would do if they want to keep volatility high and keep this back to basically that previous high, which was just, it's, how do I explain this? It was just enough to keep it above a 44-point range back here, if you guys remember. Okay. Where was this? This range in here. Off. Like, because we stalled 256-point ranges here. That's in line with 9.7, FYI. That's another reason why 9.7 is so important. But from these closing points, these were the 66-point stalls here. I don't know if you guys remember that. And then from these points here, this was the 44 points, right? So them keeping it like around here is still going to be a 44-point hold. Does that make sense? Off these ranges here. Ideally, you'd want a 44-point hold off what? And this is why this area is also very pinnable. This is also 17 to 22 points off yesterday's lows. So it makes total sense if they would try keeping it in this range here. That's why I was surprised no one voted for the orange box. It's kind of an area that keeps us at risk, but then still slightly in play. This is the 17-point range here. Okay, do you see the confluence around this range? And it's right back basically to these calculated closing points on the 12th and 13th. And it's the 44-point interval. So which area do you think would be the minimum requirement off the week? Don't get this wrong. I'm giving you the answer, but it's like right in front of you. So don't get this wrong. It doesn't really progress us, but it doesn't completely negate us if they hold this range here, basically. Well, it's not that. It's more if they already hit max ranges for the week, and they could just recycle now for a period of up to 9 days. So what's the area, guys, that from the weekly open, I'll give you the hint. Last time they stalled, I think they stalled 43 points here. So they had this big reversal, okay? What would you have to do to try and avoid that? And keep odds in play of taking out this. We're basically working with that 86.5 to 88-point range. And it makes sense because that would be off of our intervals here, okay? And it would make total sense off this spot right here. It's right on the chart. What's the area that you would be working with here? That this area has a lot of confluence. It's what would give us that 65.10 odd to retest. They just might make it a little bit tricky and would still give us a 44-point break off these past ranges here. And it would still give us a 44-point break off the weekly open. What's that spot? Hello? I know you guys can hear me. Where do you think they'd have to close this for this to stay even just relatively safe? Not even safe, but just at least keep odds in play of still having a potential of retesting this 65.10 mark, which we know is a massive overhead. I basically gave you guys the answer. So, I mean, come on. The answer's right in front of you. The answer is right in front of you guys. Okay. Yeah, 66, 50, 67-ish area. Okay. That's a huge spot. This holding here gives us at least an odd of keeping those odds in play. Was 22 a good open for us this week? Not really, right? Like, we preferred at least 2.5, 2.4. Ideally, if they would have opened around 2.8. Okay, so a 2.8 range or 2.5 range would be closer to here, 7.1. A 2.8 range off of these past structure breaks back here would have been more aligned with 7.2. Right? This is setting us up to see what would be, what kind of odds would we have for next week maybe in the zone if they bring it back. Does that make sense? So holding 6.6 gives us odds of 65.10. Does that make sense? So that's the minimum. 6.7, 6.1 gives us odds of like 16, 17. To blue range? Well, it just gives us odds of getting a break of this high and getting our calculated range for the week, which was 65.10. These types of ranges in here, closer to like 70, 71, is close to that 2.4, 6.5, 6.4, 2.4, 2.5 area, which isn't bad. This would still keep us potentially stuck in the neutral box. What's the top of the neutral box? And if they keep us stuck in the neutral range, which is what this is implying, that's how we could potentially go sideways for up to 8 sessions. What's the neutral box range? Don't get this wrong. Do you see how these areas are linked with the neutral zone? What's the neutral zone? This area here is linked with the neutral box. This whole area here. What's the neutral zone? That's why I said that 6.6, 7.1, 7.2, basically beneath 7.4 doesn't really do anything for us. Like, it could give us some slight progress, but not much. Yeah, neutral zone would be basically beneath 14, but above 05, 06. Okay? So it still gives us an odd of getting there. The full neutral range is between 9.9 and 14, I guess, if you want to do it that way, but like, so you'd still have some odds of getting to like 6,500. But do you see what I'm saying? This whole range kind of still keeps you stuck between here. Okay, so it would give us at least a decent odd of getting these areas, but does that make sense to you guys? And it would still keep odds in play, but that could give us that sideways action for a few weeks, being stuck in a neutral bar. Neutral areas usually give us odds for volatility. So this seems to be a very calculated spot to pin. Look at that. 6.750 right at 4 o'clock. 7.150 close. This is linked to that 2.4 range. And that's where I would have preferred that they would have opened this past week. So this is more linked with this right here. Okay. Closer to like this range in here and the 2.8 range from back here. It's basically the resets, but even though you can't tell that they're resets, they are. Let me know if this makes sense, guys, because this is where we would have actually preferred to have started the week, was around 2.8, 2.9. Okay, but do you see how they're kind of just stuck in this range? So this is like a 2.5, 2.6 kind of box area, which is exactly where they were before they broke that 6.8 mark on the upside. So like right here. Let me know if this makes sense, because these are the intervals I started the week with, so it makes sense that they're going to probably end the week here with these ranges. And it's probably whatever's the most aligned with where they actually stalled. So like in this area here, this makes sense because they stalled right here, right? So 44 points from there would be this area here. And ideally, this is 6,650, guys, is and 7.5 is linked with weekly open. Okay? So hopefully they can at least try holding it there. Any questions before I sign off for the weekend, or was this pretty straightforward? I feel like based on what they did here, it made sense that they would try taking it back to these ranges and then basically reset us for next week. Let's be mindful that we could be stuck now for a period of maybe 2 weeks. So hopefully they at least can pin us back at this area here. We're still working with those ranges. So that's where like the 6.4 comes into play. And I think we said 6.4 was this range off the actual high. Oops, like right here. And I did say that they've been working with like 45.5 points, but hopefully this helps you guys understand why they might just keep this pinned here. I hope. So before I end the stream, do we still have odds for next week of retesting highs? I think so, but it's kind of doing, it's probably setting up for what they did back here, where like they slightly take out lows. Do you see this? Slightly take out highs. That could be easily what's setting up for next week based on this, and it's unfortunately it runs from the 13th all the way through till August 26th. So if we get stuck, guys, be prepared to stay stuck for a pretty wide duration of some back and forth. Okay, we're preparing for this now so that we're not like caught off guard or something if that ends up being the case. It would suck, but maybe it's just preparing us for that next leg before month end. Okay, because they know breaking the zone can get us that next zone break to 6.588, and maybe they're just not ready to do that. They'll probably have similar ranges, so maybe I would imagine that the range is going to be like 88 points. Oh wow, this is exactly 87 points. That's crazy. So I would think that that would probably be the range, is around like 88 to 95, 96 points. 107 points is when they finally broke range. That makes sense to me. Let's just make it very simplified and work with 88 points. Are you guys good with that? Because that's kind of what they started with. And I feel like that makes it easier for people memorizing 44, 44. So for now, the ranges that we're going to work between are between here, okay? Which is back to the previous zone. And you can kind of play around with it if you want. You can make it above here. Okay, beneath here, which hopefully they don't do that, but that would be like taking it back to 7.9, 7.8. Hopefully they can try keeping it a bit tighter. I would say to keep it tighter, you'd probably want to stay within the zone ranges. Does that make sense? So maybe they're setting this up to be a lot of back and forth until they get some structure breaks. And if that's gonna happen, then at least we're prepared for that to be the case. And that could just be a delay. Usually we get crazy volatility around August 24th through 26th anyway. Like historically that's been the case. So, and we don't have rate decision till September. Do we have anything crucial happening in the next 2 weeks? Like I know Canada has CPI on the 19th. Like Fed minutes on the 20th. That's not really. Oh, we have Jackson Hole though on the 22nd. Oh, the 22nd is the earliest, right? Because that's the 8-day flip. So 22nd is technically the earliest, and that's during Jackson Hole and Powell. So there could be a tiny window in between here, right, where they could break range. So maybe as early as here. So let's just mark this here, okay? And this could be like either or. Okay. Everyone on board? Right? Unless they decide to keep delaying through the 25th, 26th. I would rather be prepared for this than... So next week, maybe they stall a lot. What day is the 22nd? Friday? Well, I don't think all the way till September, because like that's... Our rate decision is not even until like mid-September, right? Wasn't it like the 17th or 18th or something? I don't think they'd wait that long. I'm thinking maybe like a week and a half to 2 weeks, maybe. Kind of like the same zone stalls here. And August 22nd through 26th. That's when the probability window opens up a little bit more. Okay, and it's gonna be a battle of the zones, which we've had happen before. If you guys remember the what zone was it that we battled a lot in? Something, was it here? The 8-8? I don't remember, but there was a battle of 2 zones. Maybe it was 6-4, 8-8, and 6. Not 6-4, 6. I don't remember what it was. 6-2, 8-8 maybe. But this will be a battle between basically 63-88 to 63-88. Is that right? Yeah, 63-88 to 65-32. Does that make sense? That's the battle that we're gonna potentially face for the next 2 weeks. All right, and we're gonna be prepared for that if that's the case, with some odds opening up around the 21st, 22nd, 25th, 26th. See if they can get this. I definitely don't want this in the red box though. If they're gonna pin down here, hopefully they at least pin 6,650 to 6,750, 7,1, because that's the 44 points from weekly open. And if not, then hopefully they can at least hold or clear gap on Sunday. So the way that this is setting up though, I'm thinking they want to basically maybe bring this back to the prior zone and the channel. So next week could be a bit of a tough trading week then, based on this kind of range here. Do you guys feel at least confident going into next week knowing that this could be the case? So I'm going to be prepared then to maybe limit trades next week if that's what they're setting us up for. Or be prepared for at least a lot of back and forth. And it makes sense too, because today is the 7th bar. 1, 2, 3, 4, 5, 6, 7. This was 7th here. 1, 2, 3, 4, 4th exhaustion stick. 5, 6, 7. So August 20th. 8, 9, 10, 11. That makes sense. So 25th and 26th, guys, are the 10th and 11th bars on that daily. And there also are 8-day and 9-day flips, which I've been using for a while now. 8 days on its 1, 2, 3, 4, 5, 6, 7, 7th bar. This is a period of exhaustion or expansion to occur. 1, 2, 3, 4, 5. This is still on its 5th bar. So if it doesn't exhaust within this period, 6, 1, 2, 3, 4, 5, 6. 6, 7. That could actually end up expanding between August 26th through September 9th, through the 22nd. So maybe before rate decision, okay, if they wanted to continue this. But we hit our annual ranges. We hit Q3 targets technically, so market doesn't really owe us much more than this. We planned for these areas around 64, 71, 78, 88, 5500, 5508, 5510 as early as beginning of the year for Q3. So we can't really complain because we did hit them, but obviously getting to 6450s and 60s before month end would be the best case scenario for us to stay intact for getting another 346 point interval on the year. 346 points from there would get us like just beneath 7K. I had my annual ranges for 2025 around 6,800, I think. But again, this is only going to be the case if they give us like full continuation off these areas. So 65, 60s, 70s, those are huge spots. We're basically breaking that 1,380 points here. Okay, like off these ranges here. And this is basically the first lot of like 256. Okay, do you see that? I'm gonna just explain this really, really quickly before I sign off because I feel like sometimes people get confused. So the year we're working with around 1,300 to 1,779 points, 1,780 let's say. Okay? Hence this area was so important that they held. We're basically hitting our first interval here of around 256 points. Do you see that? Could this be a big wall for us? This is the annual range break, basically, from here. If you want to use the exact intervals that they gave us, then we could just do that, which would be right around here, let's say. Okay. Do you see this? Is this enough technically to be considered some max ranges here, or at least a stall? If we measure this off the actual closing ranges, opening ranges, it would be more aligned with here. I think that's exactly 6508.75, guys. That's insane. If we measure off of our actual open closing price points on the days that they broke annual range. Okay, so off of here, do you see that? 256 points from here is, I think, that 20 spot. So we definitely need around that 20 area. 256 points from here, I think, is exactly where we stalled, guys. Can someone document this in the chat? Just so we know. I think they did break that. 6507. What is this? 6507.25. Someone write this down. That's the 256 mark. And then from, not in here in the Discord, just because. So there's a lot of confluence around breaking that 15, 16, 20 wall. So I think this area here is going to be where there's a lot of overhead. Okay. If we actually measured this off like that 7-9 ratio, it's closer to like 6-3, which would be closer to breaking like that 20 mark. So there's a ton of overhead basically around here. Okay, we already can determine that based on where they're stalling this. So this in itself should essentially help you understand that this area right here, that's a pretty mass overhead range. Okay, what's the next interval that you'd get from here if you were to break 256 points, let's say? Okay, let's just keep it measured to where they actually stalled. So we're hitting about 251-ish points here. let's see, 257 from the actual low to high, which is actually very good. Okay, so they did hit 257 points here, 251 from the close. Okay, so that gives us a slight odd because they did break it by 1.5, but from a closing and opening ratio, they haven't. Okay, from an open close ratio, they need just a tiny bit higher, which makes sense because our annual range is 1379. This is 1373. Does that make sense? So that's where you'd probably need closer to like 1350, which is, or 13, which is the break of the neutral zone. This is going to be on the weekly report, by the way. And it's the same thing as if they had broke 7.9, which is literally the exact hold on this stick here, which we talked about. Okay, that's how we'd have better odds of like getting some core breaks or a core zone entry, which is closer to like the 19th spot. Okay, 1925 area. So this is going to be the battle, and it's the exact ranges I had from this week's report. If they come back and clear this area here, that's when we could start looking for the mid-marks. Mid-marks are usually half of 256 and 346, which is around 300 points. So they could have some volatility in the means. That makes sense because it's right around our 65, 60s, and 50s. If they get the full structure break of 346, that could get us to like 6610. Okay. A zone entry. Okay. Do you see what I'm saying? This would give us odds of getting 6596. Like you're basically just above the 6580 zone, just beneath 6600, just above 6500, basically in the next neutral range. So this would be like the next area that we could pivot, and this is basically a 6600 break here if they did do something like that. So is everyone on board why this could be a target for end of Q3 if they're able to break this battle here in the zone? This would be like a month-end target if they could do that. And if they did end up doing that, that would be the full law of 346, because this is 346 divided by 4, okay? Or times 4, I guess, is another way of looking at it, which is 1384. Like 343 to 346. This could set you up for this. Do you see what I'm saying? And that's how you could get just beneath 7K for the year. And some ranges we could look for the last quarter. I didn't really have super high odds of us breaking 7,000 this year, but I mean, I guess with contract rollovers and stuff like that, it could be possible. But I was thinking these would be more of ranges for like 2026, right? Like these areas here, but or maybe like a zone entry here. But I don't know. I figured that this is probably the ranges that we're working with. So just so everyone's on the same page, why they have some odds of getting it to this area here, maybe closer to like this area here. I'm just prepping you guys ahead of time, but we're basically at the 256 point interval here. Whereas if they keep stalling 256 points instead, this is where range could be a little bit more limited, okay? This is just preparing you guys for Q4 before we get into the last quarter of the year. Another thing too could be like this. Okay, so these are pretty, these were my targets for the year, and I feel like they're pretty reasonable based on what they did down here. Another way you can look at this, instead of looking at it from the low, from the open close, okay? you can kind of see once they closed above this area here. Do you see that? Look at where they stalled right here. Do you see this? This is the annual range stall, basically, okay, off these points here. I don't know if you guys saw this. Like, look, do you see this? That's the 1384 right here. It's the exact penny. It's crazy. Look. Off these flips. Do you see this? It's once they kind of broke above that from an open-close ratio that they started getting some progressive price action. It's really insane, honestly, if you look at it like this. Do you see this? So, and you can just look at this too as like, and that's also right in line with the top of the channel, which is why the channel is going to be very important next week. So you could also think of it as like, from an open close perspective, even if you take out the 256 point ranges, you probably want to close above, right? So I would bet money this is in line with 6,700. Yeah, it is. Do you see what I mean? And that's how it could end up netting you to these ranges here. It's a really cool way of looking at it, but those are, and these kind of spots here is basically what sets us up for, I know it sounds crazy, but another 1,400 point move. And that's just what these odds could be, okay? Especially off these kind of ranges right here, like the 650710. Do you see what I'm saying? That's what could get us to here over the next year. So if we get to 78.90 next year, just think of me. And then you'd be like, wow, Izzy was right. Or if they break us down 1,380 points from here, then you'd be like, oh, they're just like recycling this. On the yearly too, by the way, FYI, are you guys looking? 1, 2, 3, 4. Is next year an important year for exhaustion or expansion scenarios to occur? Kind of giving you guys like a little annual recap here. Look, 1, 2, 3, 4, 2022 mass exhaustion. 5, 6, 7. Do you see this? This is the 7th bar on the initial frame. This is the 3rd bar on the new frame. Okay? This year was a year where they were going to try to exhaust or expand. They definitely tried to exhaust. Do you see that? On the annual, they tried bringing this down. Okay? Once they retracted back above that 1,300 point ratio around here. Do you see this? Could they have really exhausted right here? Yes, they could have. Do you see that? They could have, if they did not hold the line here on August 31st and 1st, which were some annual flips, they could have reversed this all the way back down. This is basically them trying to save face before year end. Okay? And now you're working with your first lots of 256 and 346, which is really insane if you look at it like this. So, and then if you measure from the actual closing points, I would bet money that you're stalling right around that increment. You see this? From where you exhausted back here. Look. It's pretty crazy. So that's why breaking these annual spots like 64.50s and 60s is so important, right? If you measure from these past lows, they're probably, that's the importance of holding around 66, 65, 50, which is probably why they held this 5-1 mark here yesterday. Do you see that? Why they stalled right here? Now these are really big spots. And then if we look at it from the actual high range or opening range from exhaustion, this is where they could end the year. And that's why we could get 3,700. Okay? That's why I'm thinking this could be the annual target. Just for those that are not really quite sure, like, why I'm giving those areas. But basically right around here, they could bring it to, like, this channel. Those are my annual targets for the year. Okay? I started the year off thinking we could get to 60 700, and I still do. Like, I still think that them saving face here is so important, especially when they held the line right there. So very, very big spots. Look at where they're stuck right here. Do you see what I'm saying? So I'd say, and I would bet money this is the bottom of the zone right here. Yeah, it is. And that's probably where you'd want to try to, that's the battle that we could have. So you'd probably want to try holding there. 13. That's pretty insane. And this is also that they don't bring it right back to these ranges here, basically. Because if they did, basically if they failed this area here, they could have brought it all the way back down here. This is also probably half the range. I'm not really sure what 1384 by 2 is, around 692 points or so. And this is where they kept us stuck for a long duration of time back here. And then from open closing ratios, let's see. I remember we worked with 692, 696. Oh yeah, that's crazy. That's this range right here. Let me measure that exactly. It's like the 689 to 692 area. I talked about this a few months ago. It's basically our increments of thirds, which is that's 50, 10, 50, 55, 10. It's this area here. So they really had to try saving this, basically. Probably like right off the actual ranges down here. I don't know if you guys can see that. Do you see this? So let's look at it from like a closing range. That's fairly close. I'm off by like 6 points on this, so that would make sense because it's 692 to 96. I think this is 89, so that's that range there. That's pretty insane because that's what they're basically trying, or what they tried to hold this by. And this is probably this October 2022 hold. Do you see this right here? When they took this around on the 13th. That's why this is, do you see this, guys? It's insane. If you look at the annual ranges, it's crazy. Because look at this hold right here. This is probably the only reason why they actually, this was the 688 break. It's probably the only reason why they held right here. I'm just going to give you guys a recap of this. And maybe rewatch this because it is very important. But this was the annual range. This was the slight breach, so them basically breaking down here, you have to try to get back above this range here. And from a closing point, from that 13th right here, you have to basically close above here. That's crazy. That's why they stalled right here. Do you see that? Pretty insane. Those are the annual ranges. So from that date of volatility right here, what was the closing price or opening price that day? 4173. 4173. Let's see. Let's just test this. 4173.25. And we have to break between 689 and 692-ish. Look at where they held. That's insane. And then from the 696 break, let's see. Wow. Do you see how they held that by a hair? on the 7th, they really saved this from getting a massive reversal back to these ranges here. That's the yearly exhaustion, and that's like right on like the first quarter lot. So, and based on this, they're moving in. So from the start of the year, or even like here, do you see that? That's the 1386 to 79. That's the annual range. That's crazy. And the range that they broke here, do you see this? So the range differential between here and here is probably close to like 17, 18 points. That's pretty wild. So based on these increments that they are moving in, they're probably, that's why they came back and tested here. Do you see that? That's crazy. That's why this was like the potential breakdown right here. They had an odd, basically, okay, of like, I think we did this before, but I don't have anywhere to be. I think my nieces are coming over, but do you see this? This 81, 82 bar? Do you guys see that? They could have broke down that annual range again right here, and they tried their best to save it. So I think I explained this before, but if you really want to watch for this, we definitely have to start watching like the, and I think we said we can measure from like these structure breaks right here, because this was probably another one, and this is probably off the June 18th, 19th, 20th, 23rd range right here, okay, and that was probably the last reversal that they had. You can see it, like look right here. Maybe start paying attention to these intervals right here, like 114 to 144 days, or like the range between here and here, so like 34 days. I think we talked about this before, but that could be like maybe the range in time that you have to watch for, and that's linked with that September 22nd, which is OPEX. That's crazy. That's like the OPEX week. Isn't that nuts? That's the quarterly interval here between our 21st and 22nd flip and that October's or April 7th, 8th lows when they triggered annual range. So this is kind of like the, I'd say the potential like midpoints, I guess, between these ranges here. It's about 31 to 32 bars, 34 maybe max. And you could probably measure off these structures here. So do you see what I'm saying? There's a lot of calculated time between that week right here, and it's the week of Fed decision. And September's like OPEX and rate decisions are usually the most volatile. September is usually a volatile month, so we're basically trading within those annual ranges right there. And then another thing that we can watch for remainder of the year itself is maybe the 81 to 114 bars from here end. And I think these could be some important time frames that we could watch for into the end of the year. Does that sound good? These probably run till year end or like early January. Maybe we'll even watch them into next year. So like January 13th or something into next year. We could keep that in mind for like first month of 20. And then some dates in October. But we'll keep a close eye on that. So for beginning of, so basically end of November, beginning of December. We're gonna pay very close attention to, okay? All right, let me end this. I think this will be a good study session for you guys. And we could probably maybe think of it as like, if this was the hold range here between 696, 692 points, maybe they, I don't know if they'd, oh wow, that's pretty insane. Look, if you look at the highs to lows here, you guys seeing this? Look at that. That's also 696 points where they're stalling. That's crazy. So this, depending on how much volatility they want to bring, maybe this is the new box range potentially, 5,800 to here. That's half that box. That's pretty nuts. That's the structural support range here. And this is probably linked with these structure breaks right here from, yeah, they are. That's insane. Look, this is the exact structure break right here. Do you see that? From these ranges right here. So pretty interesting spots to look at, and I would bet money that this is probably linked with the 6,700 area right here where they're currently nesting. Yeah, it is. Let's end the stream with that. I think this is very cool, and I think this kind of helps you guys to have like a good insight for the next 6 months. So very, very important year coming up here. See if they can hold this 6.4 to 6.6 range. Figure that that's probably where they'll keep this stuck here. Seems extremely calculated. I'll see you guys on